Bob, what brings you to Riyadh?
This has been an incredible weekend. It's probably exceeded my expectations, but the kingdom is an important economy. It's the 20th largest GDP economy in the world. If you actually look at GDP per capita, it's 12th. So before these recent reforms and announcement, this was an important country and an important economy.
Does it concern you, though, that they're moving at such high speed? I mean, what was one of the most conservative countries in the world, both from a capital perspective and from a societal value perspective, suddenly just completely turning around?
Well, there's kind of the rub for me personally of being here for a few days, being able to see His Excellency the Crown Prince make the announcement that he has made, seeing the reaction of the people and just kind of being on the ground. Gives me tremendous confidence that this is not sudden, that there's a lot of thinking that's gone through this, a lot of analysis.
Yeah.
I had a chance today to visit the exhibit on Neom, the city that's being built, and Qiddiya, the center that's going to be outside Riyadh, the Red Sea project. And when you see the amount of work that's been going into these things for months and months, you realize it's not quite as sudden as it feels.
$500 billion in commitments for that new city, including international investors. Where's the opportunity from where you're standing?
I think it's really two things. I think Saudi Arabia, the kingdom, has become a more important destination for international investors. And when I think about it from our point of view, we invest in financial services, particularly the capital-intensive businesses. And I think now this is an important opportunity for us to look at opportunities to partner with some of the financial institutions here, many of which have some large percentage of ownership from the PIF. Equally, I think what the kingdom has said is that we are going to diversify and sophisticate our investing around the world and increase the amount.
Yeah.
So I think as an international investor in financial services, we'd love to look at opportunities to partner with the PIF in that way as well.
And we're seeing that, of course, with the Public Investment Fund as it bolsters and redefines the way it approaches investments abroad. I mean, if you think of the recent transactions like SoftBank and Uber. I want to segue a little bit to what's going on in Europe with some of the risks there. You've been increasing some of your business activity there. I mean, where do you see Europe going as a whole, given some of the recent difficulties that it's had?
Well, I had I was able to vote in the UK as well as in the US, and I voted Remain. So I want to be very clear that I was supportive of remaining in Europe. But one of the things I've seen in the last 3 to 6 months is one of the unintended consequences, and it was completely unintended, is it's given core Europe a chance to really pull together. And we're seeing the impact of that exhibit itself mostly in the periphery. So we've acquired 100% of a bank in Greece. We're working with some people in Italy on a similar opportunity. Corrado Passera is someone that we've worked closely with there. I think one of the finest chief executives in Europe. And both of us think that opportunity across Europe is excellent. Now, I have not been positive on Europe as an economy for probably 10 or 12 years. And I think one of the unintended consequences here is many of us as investors are becoming quite positive on Europe.
And the latest shockwaves around calls for autonomy in places like Spain's Catalonia or Italy's Lombardy, you see that trend intensify?
I think
these are periphery issues as well.
Yeah, and I think we've seen these types of issues across many countries. So we'll see how this one plays out. But I think the opportunity to be investing in not just core Europe. I think from the beginning people were comfortable of investing in Germany and maybe investing in Germany and France. But Greece, as an example, was the first to really take the pain and the first to start implementing reforms. And I think today the risk reward is very much in favor of betting on Greece.
Let's cross the Atlantic to the U.S. So we're looking ahead to a decision on who might become the next Fed chair. Different names are being thrown around, from Taylor to Powell to the incumbent Yellen. Who would you pick out of the three, and what does it mean for Fed policy?
There's no way I'm going to get involved in answering that question. I'm going to give you the answer that they're all good candidates, and I've seen all of them that are mentioned, and the truth is they're all good candidates.
So you wouldn't necessarily pick one over the other. Who do you think is most likely to take the job then?
I'm going to give you the same answer on that. I'm not going to get into that.
Do you think the Fed is ahead of
the truth is, I haven't spent a lot of time thinking about it because it's going to be what it's going to be.
Either way, whatever happens, there's going to be a gradual normalization of monetary policy. Do you see the Fed ahead of the game, ahead of the ball, ahead of the curve?
Yeah, I think that's probably a fair characterization. I think I was surprised early on of how long it took them to begin to equalize. I think they've been a little bit ahead of the curve now, and I think that's a positive. I think the economy in the U.S. Continues to really surprise us with its resiliency and its strength. So I feel pretty comfortable that the Fed is acting in a very appropriate way. One of the consequences of that is we're seeing more and more interest in the U.S. investing outside of the U.S. Recently, we've just done a $200 million capital raise for one of our ventures in Africa. Most of that fundraise was from Canada and the U.S., fully underwritten by Fairfax in Canada. And it gives me a clear window on the fact that the investors in the U.S. and Canada are really looking at the opportunities in the emerging economies. Let's
pick up on some of the African opportunities where, of course, a bulk of your business is being done. What's going to happen next year? I mean, what's going to be the next catalyst? Because it's been a rough year for Africa as a whole with the commodity prices that haven't rebounded to the levels we've seen before. What's going to be the next key unlocker of growth?
It's probably closer to 2 or 2.5 years, not just a year. I think the commodity cycle reversed, led by oil prices, had a huge impact on economies like Nigeria. I think currencies were weak relative to the US dollar. And one of the things that was happening that was probably didn't get as much notoriety is the pullback from many of the European banks, where Basel III, SIFI, G-SIFI were pulling back of capital to the home markets in pursuit of return on equity above the cost of equity, things that we've talked about before. And that's created an enormous opportunity in Africa. And I think when you look at the demographics, when you look at the population, when you look at what's happening in urbanization, and then most importantly, the opportunity for technology to help many of these economies leapfrog, I think the investment opportunity today is better than it's been in quite a while. We've recently just doubled down on our investment in Nigeria is a good example. And relative to 2 to 3 years ago, equity prices in the areas that we're looking at in financials are down 50%. And the currencies are significantly weaker.
When you look at some of the bond yields, government bond yields in Africa, I mean, arguably they're trading at levels very close to some of the developed markets. I mean, there's clear demand for some of that paper. What's your recommendation? What are you telling clients in terms of getting exposure to the African story that you are saying is intact and has a lot of opportunity?
I think if you're a long-term investor, and our investments in Africa are all permanent capital. We listed equity on the London Stock Exchange. The recently underwritten deal that we did with Fairfax was also permanent equity. So if you're an investor with a 3 to 5 year view, or better, a 5 to 7 year view, this is absolutely the time to be investing.
When you look at, I want to bring it back to the global economy again, and just, given your experience, I want to get your thoughts as to what concerns you most when you look at the world, the way it's shaping up to be today.
So I think there are a lot of positives. And I think the U.S. economy, as I mentioned earlier, has been incredibly resilient. I think trade is encouraging. I think most of us here, when asked what are the things that we worry about, it's really the leadership vacuum around the world.